Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks climb after a softer than expected U.S. inflation print. Wall Street getting a breather after 2 days of losses. Walmart facing the heat from China over reports it asked local suppliers to bear rising costs from U.S. tariffs. And we'll be getting markets outlook with Principal Asset Management and where they think it is a good place to invest amid a trade war. Plus, former Philippine President Rodrigo Duterte taken into ICC custody. He's being detained in a Dutch jail that provides volleyball and even spiritual advices. Asian equities rising after cooler than forecast U.S. inflation helped Wall Street rebound from 2 days of heavy losses. Consumer prices in the U.S. rose at the slowest pace in 4 months in February. Airfares, along with the price of cars, fuel and groceries, fell, except for eggs, of course. While the report offers some relief, there are indications that inflation is rearing back up again. And with Trump rolling out a series of tariffs, prices are expected to rise on a variety of goods, from food to clothing, testing the resilience of consumers and the broader economy.
What we're seeing is people are much more ready to pull the trigger on price increases than they were in 2021, 2022. So if these tariffs stick, and if we get more tit-for-tat trade issues and things like that, then the pass-through to prices will be quick. And it will come at a time when demand is softening.
And with U.S. retailers under pressure to keep their customers spending, some are trying to get their suppliers to bear the brunt of any tariffs. In China, authorities have summoned executives from America's biggest retailer, Walmart, over reports the company is demanding price cuts from its Chinese suppliers. Well, for more on this, we are joined by Bloomberg's Asia Global Business Managing Editor, Rachel Cheng. And Rachel, we know that 80% of Walmart suppliers are in China, and now it's trying to use its leverage, and China's saying, no, you're not doing that.
It's a really interesting situation that's unfolding for us, and we've been really ahead of the story from the beginning. So what we do know is that, after Trump announced that first round of 10% tariffs on Chinese goods, Walmart went to its Chinese suppliers and asked for them to cut prices, so effectively absorbing that entire increase in tariffs. And then there was a second cut, a second 10% that Trump announced, and they went back again to suppliers and asked for further drops in prices. So essentially, this is a company that's known for very low prices. They're known for often pushing, their Chinese factories and suppliers across the world for lower and lower prices. That's how they maintain their margins. But what's so interesting in this latest round of negotiations is, the politics of it is really fascinating, right? Essentially, this is a cost increase coming from the American government, but Walmart, an American company, is wanting their Chinese partners to take that cost. So, the hypocrisy is there, and I think that's something that, the Chinese government is really reacting to. China is very sensitive about being seen as weak in the face of what Trump is doing.
That is indeed a very interesting point, Rachel. The thing is, this is coming at a time when margins for Chinese exporters are already so thin.
Exactly. So the Chinese exporters, what they were telling us is, they can't really say yes to the scale of the cuts that Walmart wants. They want, a 20% drop. But, a 2 to 3% drop alone would mean that these manufacturers are not making any profit at all. That's what they're telling us, of course. The negotiations are still ongoing, so we don't know how this is going to play out, because we do know that Walmart is a very top-tier client for Chinese factories. The scale of the volume that they order is huge, and a lot of factories really compete to get on that supplier list, and they don't want to give up their spots. At the same time, China's going through deflation, so we know that, potentially they might find that cost increases elsewhere. But now that the Chinese government has spotlighted what's happened, essentially has censured Walmart and saying, stop doing this, Walmart may also back off for the sake of maintaining its business and its relationship with the Chinese government.
Rachel, if we pull out a little bit more, this is going to impact supply chains in the longer term.
It is, yeah, of course it is. And I mean, that's what tariffs do, right? You know, the supply chain globally is so interconnected. You know, China is still the world's factory, although there have been many efforts to diversify into other countries, you know, or to onshore some of these operations back to the U.S. You know, China still has such advantages in terms of that huge manufacturing system, that ecosystem. And so everything that Trump is doing is creating havoc in the world's supply chain. You know, what he's saying is it's worth it to, you know, get some of that value back. You know, China does have a massive trade surplus with the U.S., and we know that he's really upset about that. But, you know, we are seeing a moment of complete withdrawing of what we know of global trade.
That's right. Thank you so much for that perspective, Rachel. Asia Global Business Managing Editor Rachel Cheng there joining us from Hong Kong. Let's get more on the impact of markets. Kamal, Bhatia, President and CEO of Principal Asset Management, which manages about $500 billion in assets. He believes tariffs will likely have a meaningful impact on U.S. inflation. Good to have you with us. First off, though, it's really difficult to quantify the impact that tariffs will have, and hence it is complicated.
Absolutely, Haslinda. A lot going on here. So start with your question. I do think it's not as easy because there are a lot of forces that are at play here. Obviously, we were just talking about the tariff impacts on supply chains globally, and that there is a pass-through effect. But at the same point in time, a weakening economy also forces the base rate of how consumption equates. So the assumption is the consumer continues to consume at the same pace. Obviously, you will see some level of inflation. But if the consumer reacts to price actions negatively and consumption goes down, it's not clear what that translates to.
And of course, it is about inflation. We had the CPI print, slightly weaker than anticipated,
yes.
But it's a dated data, isn't it? I mean, you can't read too much into that.
Well, it's quite noisy right now. 1 month doesn't make a trend, and we haven't seen the impact of what's going on in the last month in the market so far. So you're absolutely right. There is a certain sense that inflation might tick up, but we'll have to wait for the next month for that. And the other aspect of this is there is a lot of forces at play, particularly as the U.S. also reevaluates where it's spending, particularly on the government front.
And also, not to mention that the preferred gauge for the Fed is the PCE.
Yes.
And as far as that is concerned, it is still higher than the Fed's own target.
Yes. Well, the more interesting thing is the preferred gauge for the government has now changed to the 10-year bond. So we do have different people looking at different dimensions right now.
So how do you play this? I mean, how might the Fed be looking at it? I mean, some say, if you take a look at the data that we've just seen, the CPI data, that could add one more cut to the Fed's moves for the year. But others say perhaps not, and it's too early to tell. How do you think the Fed is actually looking at all of this?
Well, I think they're going to take data as it comes in, and obviously I think they don't have. I don't believe they have a fundamental point of view on this right now. I think they're going to be very focused on reacting to what the information tells them. I think if you go back to a year ago, where they reacted and had raised rates or declined rates as well, the market went in the opposite direction to their actions. And I think they've understood that they need to take a longer-term view and not react to month-over-month data. And I think that's how the Fed's going to behave this time.
You talked about how it's a noisy environment. What are you particularly looking at?
So I think one of the more interesting things we are looking at is if you look at not only nations but companies, they had really focused just singularly on growth. For the longest time, we measured success based on GDP growth. We even talk about this idea of, are we going to have a recession or not? And there's been a lot of conversation around, which is simply saying, is GDP growth slowing or is it going to be negative? I think one has to fundamentally re-rate their thinking that there is a new element in town, and I would call it debt to GDP. We have ignored it for a while. I think there is a tremendous focus on that in US now, particularly because we got to certain levels of debt to GDP. And if you really think about not only the administration's focus, the market focus on that measure, I think that completely changes how you think about economic impact and its impact on rates and investing.
But what's changed? People have talked about how debt to GDP is one to watch, but not now.
Yes.
Perhaps in 2027, 2028.
Yes.
What's changed to bring that to the fore?
Well, I think it crossed, obviously, at least in the US, it's crossed 100%, and it's well above that. So that trigger point changed it. Post-COVID, I think we accelerated the dimensional drive towards that number increasing substantially. And I do think there is a sense that as we think about aging populations everywhere, including the US, the cost of debt and what we have to pay on interest payments being higher than what we generate in revenue, I think the equation shifts tremendously because you hit that trigger point. And I think it's not reversing back for the foreseeable future.
So what do you do?
Well, I think...
What do you do with your capital, more
Yes,
importantly?
Absolutely. It's a great question. So one, we would probably think about it in two different ways, given that we are a fairly global manager. And one of the things we do is we actually have teams in each individual country and region. Asia Pacific, where I've spent this last week in Singapore, is a big focus area for us in the ASEAN region. And one of the things we want to ensure is you don't think about just what's happening in the US and how you act in Singapore or in Tokyo or in Europe. So you have to have a regional point of view that is somewhat insulated from all the global noise. One thing we have been observing, and we did last year a call ahead of this, was the global multinationals are going to be a difficult place to be. We have had tremendous tailwind if you were a global multinational, not just globalization. The fact that you benefited from the arbitrage of global supply chains, the tailwind the market rewarded you for being a global multinational, I think that's going to be a difficult place, which we haven't seen in a long time. And you will see the emergence of more what I would call local and regional players. And in the US context, that means smaller companies who are more anchored to domestic consumption rather than get disrupted by global action is going to be a way to think about it. You have seen that play out in Europe just this year of how the European stocks have reacted. The other piece I would highlight is just on the fixed income front, I think you're going to probably see lower action on the 10-year because that's become the center of gravity. And paying attention to that would be very valuable. Credit spreads have widened, but credit still remains an interesting place to play rather than predict the direction of interest rates.
In terms of movement of capital, are we seeing capital being moved from the US and elsewhere? Are people repositioning?
Absolutely. I think we have seen...
How much?
Well,
what are we looking at?
So there are two trends. A lot of capital outside the US had actually gone into US. You could see it not just in investments in public markets, you also saw it in companies on the private market side. That has somewhat slowed down or paused, and I think most of that capital is looking to reallocate away from what I would call the US large stocks. Some of it is going to go into smaller companies. We have observed that at least in the Asia-Pacific region, particularly, a lot of capital wants to find pockets inside the Asia-Pacific region right now.
And we'll talk about that just very shortly. Hang tight, Kamal. Kamal Bhatia, Principal Asset Management, is sticking around. Well, up next, the AI hype around stocks hasn't died. It just seems to have found a new home. We'll discuss whether fans of tech stocks should now be looking to China for magnificence. That's up next. Keep it here with us. This is Bloomberg. Welcome back. Amid dramatic advances in China's AI, global investors are pouring into the Hong Kong market. It's leaving stocks in the US and Taiwan in the dust. Avril Hong is here for a closer look. Avril.
Yeah, Has. I mean, it's been boom town for Hong Kong markets, especially since the start of the year. You had DeepSeek, you had some follow-through from the NPC, but also remember how this is a preferred home for Chinese tech listings and among the most liquid markets in the world. But of course, on the other side of the equation, it's also related to erratic policy making out of the US that has undermined the confidence in the American economy. And if you look at some counts of the divergence in the Hong Kong and the US stock benchmarks, it's at the widest since the year 2000. That's when the dot-com bubble burst. Of course, Taiwan, as you alluded to, has also kind of been swept up in this selling in global chip stocks. It has been, as you know, one of those markets that benefited from the idea that US AI is the only game in town. Of course, there's also another part of this equation that some of our Insight guests have been highlighting, and that's to do with AI investing sort of moving to the next phase. Have a listen.
The biggest thing happening is we are decisively moving, I think, from the picks and shovels phase of AI, where the focus was on building out, on coming up with a better training model over and over and over, to the implementation phase, to finding out use cases in one industry and another and another.
Now, RJ goes on to cite a great example of how when it came to refrigeration technology, it wasn't the refrigeration companies that benefited, it was Coca-Cola. So some context to keep in mind amid all this. And it also goes on to explain, in a way, how for Taiwan markets, the declines have been so bad. The rotation out of chip stocks, as you know, TSMC is accounting for about a third of the weight in the benchmark, and it's fallen about 10% since February 21st. Foreign investors are dumping Taiwan shares, and all this has also macro implications. We had some of the central bank officials warning of currency risks amid the stock market outflows.
And reassessment there. Avril Hong, thank you. Kamal Bhatia, President and CEO, Principal Asset Management, is still with us. How are you reading into this AI space, AI story? There seems to be a shift now.
There absolutely is, Haslinda, and I think you were just talking about, what happened with DeepSpeak in China. The way I would highlight is it's kind of changed the narrative because it reminded you could innovate under adversity. But probably the biggest shift in thinking was there has been a view you need billions of dollars of capital, and you needed this financial heft to really win the AI wars. And what that proved is, well, while you need that, you can actually win that war another way, which is on talent. And what China threw at that problem was engineers, not just capital as well. And so there has been this re-rating of how you think about how these AI wars would play out, with sort of America not being the only place where it works out, which is incredible, because I do think it's a global phenomena. And what that means is obviously, as you were just describing, the infrastructure investments for AI are increasingly getting more expensive and complicated. We are now to generation 5 in some of these AI models. And as you sort of asymptotically want to get to the next generational model, the amount of capital you need to go from model 4 to model 5 just leapfrogs a lot more. We were early on quite excited about the evolution and output of AI models was, but now it gets increasingly difficult. So I do think the infrastructure investment of AI is going to be the place to be. There is a lot of excitement on the revenue side. We are big investors in data centers, so that's a place where it has been. But I think there's a second leg of it, or what I would call specialized software companies who will sit over that infrastructure that have to define that before you get to the end user.
So where do you find that second layer? Where do you put your money now, if not in the likes of NVIDIA or the Mag 7 for that matter?
Well, I go back to this idea that you cannot ignore local or regional innovation. You can't just believe these 7 companies are going to control the marketplace. I think there is...
And you'll find that a lot in China.
Well, you find it in other parts of Asia as well.
Such as?
Well, China obviously has a lot of talent, but places like Singapore are not far behind. In Europe, you could see some of that happening in places like France. And so I do think there is an ability for those companies to be identified outside of US.
In putting money in AI, you got to consider in the future how AI will be used. And for a large part, we've been talking about how companies will be utilizing AI. How are you looking at it? How is that shaping the way you invest in AI?
So right now, I think the big focus for large companies like us on AI is really what I would say the back office side of what you do, processes. There is an ability for AI to improve how you implement your processes. I think that is the place where you'll see the biggest impact. I don't think so you see a lot of revenue generating opportunities just yet. It improves productivity. It could probably help you a little bit with margins. But if you have to be in a process industry to really see value of some of these AI activities.
I want to link it back to the sell-off that we've seen so far. In fact, we just had JP Morgan saying, the sell-off in the U.S. market is possibly over.
Yep.
And that's, of course, giving confidence that the MAX 7 will continue to rally. Yeah. But the thing is, you're saying otherwise. I mean, how are you assessing what's being thrown out there?
Well, I think it's a little too early to make that statement. I do think there has been a little bit of re-rating of how one thinks about risk assets across the world. In the last few years, what has really provided this market some base and discipline has been more and more investors. We manage a lot of retirement assets across the world, Haslinda, and if you look at the trend in those assets there has been a discipline of rebalancing, whether you do it monthly or every quarter end. And people are actually investing according to their asset allocation framework. There is a point of view, as we get closer to end of March, you will see some of that base coming up. It provides a base to how people reallocate back to their base asset allocation. So that should help the marketplace. But to argue that on a day-to-day basis we have found the bottom is very, very difficult to predict.
It is very unsettling for investors right now.
Yes.
People are wondering where to put their money or whether to deploy the money at all.
Yes.
When you take a look at your clients, are they wanting more risk, less risk? Are they wanting to deploy more money or not?
That's an interesting question. I don't think so clients' risk appetite has changed. I think where they deploy risk has certainly changed. I think there is a deeper desire to allocate outside the US right now. I think some of it has already shown up in the valuation re-rating, but there is still a desire to invest outside of US across developed markets and emerging markets. From our clients, I met a few, I've been meeting some clients here this week. There is a deep interest in understanding what happens with private markets moving forward. One of the things I would describe to you is everybody talks about how global equities became more globalized. There is a globalization happening in private markets right now. From things like real estate to private credit, those spaces are growing outside the US, and clients want to find a way to participate in that. For us, particularly in the real estate area.
And that seems to be a theme,
Yes.
that interest in private markets. And
Yes.
we know, the herd mentality
Yes.
usually it's a sounding block for trouble coming. I mean,
Yeah.
how are you assessing that risk?
I think it's a great point. So I think the idea is to bring some institutional quality thinking to those asset classes, and that is happening. Investors are quite astute these days. They can make a decision around what is better on relative value and who invests well. So I do think, whether things could get out of whack from a valuation perspective, obviously they can happen. There is a lot of what I would call frenzy in private credit right now, particularly at the large end of the private credit. But the space we have looked at, particularly on the mid-market side, there isn't that much frenzy.
Okay.
Because you're going to companies that have had a little bit more discipline, and the lenders who are providing them capital have been much more disciplined and extended.
All right, so risk, appetite, intact,
Yes.
but it's where the money is deployed.
Yes.
Kamal, thank you so much for your time today.
Thank you.
Kamal Bhatia of Principal Asset Management. Let's take a look at how U.S. futures are trending. Of course, we're seeing a breather in the Asian markets on the back of that, that weaker than expected CPI numbers. S&P futures still pointing to a slightly negative open, down about 1/10 of 1% right now. But for the Dow Jones futures and Russell 2000, well, there's hope just yet. MSCI Asia Pac Index currently up 0.2 of 1%. Still to come. Former Philippine President Rodrigo Duterte trades his countryside home for the ICC's detention center. We have details coming right up. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. As we've been reporting, U.S. inflation rose at its slowest pace in 4 months in February, driven in part by a drop in car and gas prices. Bloomberg opinion columnist Mohamed El-Erian explains why, despite the cooler data, consumers are adopting a wait-and-see approach.
So if you talk to economists, they'll tell you looking back, it's good news. Looking forward, there's very little information content, because of what David just said, what we've been discussing all day is we don't know what the pass-through of expected and actual tariffs will be. So that's where the economists are. For those in the market, having been disappointed on the Trump put, this is better news on the Fed put. And I think that's why you're getting such a strong reaction on the equity side.
There's been so much confusion, Mohamed, about tariffs in the past 24 hours or so. You wear several hats, one of which is you've been a business leader for many, many years. And I think you made the important distinction when we had the boom of inflation. You made the point that this was not going to be transitory because of what you saw at the corporate level, how companies were acting and how they were responding. Given the threat of higher tariffs still to come, what do you see now from companies? And what does it indicate to you about what data might look like in months and quarters to come?
So two things are obvious to me, John. One is that companies have gone into a wait-and-see attitude, and understandably so, especially if you're a multinational. You need clarity. So you're postponing decisions because you don't want to make a decision that ends up being a big mistake because the world has changed on you. So we are seeing business activity slow down. The second thing we're seeing is people are much more ready to pull the trigger on price increases than they were in 2021, 2022. So if these tariffs stick, and if we get more tit-for-tat trade issues and things like that, then the pass-through to prices will be quick. And it will come at a time when demand is softening. So then you bring the third issue, which is the consumer. The consumer is hesitant already. I take seriously what you've been saying, all of you saying about what's happening to airlines, what you're hearing from different retailers. There's been risk aversion, clarity on the sense of the household. So put all that together, John, it is a wait-and-see economy that cannot absorb much of a price hit.
Mohamed El-Erian, president of Queen's College, Cambridge, and Bloomberg. Former Philippine President Rodrigo Duterte is at the ICC detention center as he prepares to face charges for alleged crimes against humanity during his deadly war on drugs. He will likely be confined to a 10-square-meter cell that's a little larger than a sedan with a bed, desk, cupboard, sink and toilet. Bloomberg's Manila Bureau Chief Manolo Sarapio joins us now. Manny, give us an update on what we're seeing there.
So basically, this is where he will be accommodated since he landed in the Hague airport yesterday, and what we're seeing, this is where he will be housed shortly after arriving, following his arrest on Tuesday morning, and. The thing is, and also the ICC is saying that in due course, a hearing will be scheduled. We don't know when that is happening yet, but obviously Duterte's team is preparing for that eventuality. His daughter, the vice president, has landed in the Netherlands, I think this morning, and it would help him with the necessary legal defense that he's going to put up.
Manny, is there a sense that this will be a long legal proceeding?
There is, and no less than the former leader himself has said so, that he is looking forward to a long years of proceedings. He made this video he pushed out on his Facebook page shortly before he touched down in The Hague. And the interesting thing here is if he is convicted, apparently the ICC is saying that he will be transferred to a member state of the ICC. And we all know that the Philippines has withdrawn from the ICC in 2019. So that will be interesting what happens next if it comes to a conviction.
What happens next, and also what kind of sentence might he face, and what Duterte is saying all about all of this?
So I think based on the video that he made last night, he said that he is responsible for what he's done, and obviously during his address to his supporters in Hong Kong shortly before all this unfolded. He said that he is ready, and he did this, meaning his war on drugs that killed more than 6,000 people for the sake of the Filipino people and their children. And he is not saying, he's not apologizing. He's saying he's responsible and he's going to face this head on. And I think that's what we're seeing that he's doing.
Manny, thank you so much for that. Bloomberg's Manila Bureau Chief Manolo Serapio. Let's get more insights from Bob Herrera-Lim, MD of risk consultancy Teneo, who is also Chief of Staff of the Majority Leader of the Philippine Senate. Bob, good to have you with us. I mean, a lot of people are still digesting what has just happened. It happened so quickly. It is a surprise.
Yeah, it depends on basically what side of the political fence you're on. For many of the Filipinos who were hoping or expecting or wanting Duterte to be sort of brought to justice, it's been a surprise because it was quick and it happened efficiently. But for many Filipinos who support the former president and see him as a good leader, they still see him as a good leader, there's a lot of shock at the things that happened, and they're claiming Duterte was not given due process. So you have this sort of divide right now in terms of perceptions in the Philippines, and it's noticeable. It is noticeable in the cities versus the southern part of the country, where he has his bailiwick among the elites and among the poor or lower income groups. There's very, shall we say, disparate perceptions of what happened.
Just to put it out there, this could not have been done rapidly without the support of Marcos, President Marcos, and some say perhaps this was perfectly executed by Marcos. How do you respond to that?
Yes, it is impossible to disentangle this from the politics that is right now happening in the Philippines, which is that the Duterte family, whether you're talking of Sara, the vice president, or the father, are seen as the top two political opponents of the Marcos family, which has an eye, obviously, towards not only the midterm elections, but to the succession to Marcos in 2028, because he is prohibited by the Constitution from running for a second term. So while you may have one side of the issue, which is, was Duterte guilty of all the things, the extrajudicial killings, what did he do it as state policy? You obviously have those issues, and they will be litigated in the courts. There's also the other issue as to why did Marcos do this now, and whether or not the efficiency with which it was carried out reflects his administration's desire to remove the Duterte family as a contender in Philippine politics. And obviously, both are separate issues, but they cannot be untangled from one another. They will continue to be played up in the media in the Philippines. They will continue to define people's perceptions of this. The people who do not like Duterte will say this is a case on the merits. It's a case about his extrajudicial killings, about his behavior as president in terms of violating the rule of law. The people who like Duterte or support Duterte or have some sympathy for him will say, no, this has nothing to do with that. This is about Marcos wanting to eliminate a rival. It is about the political elites in Manila who are not comfortable with Duterte because of the crude, to some extent arrogant way in which he carried out state of affairs. So you will, again, it is this fundamental division that you will see being played out in both narratives, social media, and coverage of the whole situation.
Bob, politics and family feud probably played a part in this, but you can't take away from the fact that this is the culmination of years of work by activists, by lawyers, by victims.
Yes. And actually, if you think about it, yes, there is a valid argument to be made. Obviously, there is a lot of documentation about all the excesses, all the abuses, all the extrajudicial killings that happened during the time of Duterte. Some people will say, and this is the sentiment now, it's not to sort of judge which side is correct. So on the one hand, what you will hear in Manila is, or throughout the country is, on the one hand, Duterte was wrong. He did it the wrong way. He carried out acts that were in violation of human decency, of morality, of law. On the other hand, you will hear communities, people, a lot of his supporters saying, yes, the government was dysfunctional. It was not solving the drug problem. It was inefficient, ineffective in protecting people's lives and property. And that's something you see, right, in the rest of the world. There are leaders who you will argue or can argue are not fit to take office or be in office. But at the same time, people will saying, but government has not delivered for us. And Duterte is the one who delivered. So without going to the merits of who is right or wrong, and definitely it is a multi-layered argument, that is the kind of debate you will be hearing in Manila in the days and weeks to come. And definitely one of the things we caution clients of Teneo is this, that even though the merits might seem cut and dry when you're looking at this from the outside, it is the domestic sentiments, the political sentiments that will drive things. Without belaboring the point, 30 years ago, Marcos, the father, was ousted in a people power revolt, and he was deemed by many of the country's elites as corrupt, a human rights abuser. 1 decade later, his son comes back into power. So this raises the question: is there political payback coming for the Dutertes as well? Those are sort of the underlying themes of this.
So how are you assessing it? Is that a possibility at all?
Yes, you cannot write off the Dutertes. For one, Sara Duterte remains viable as a candidate. She is undergoing impeachment, or she has been impeached by the lower house and charged by the lower house. She might undergo trial by the Senate. If she is convicted, then she will be disqualified. Now, the question is, therefore, will the senators who are scheduled or supposed to hear her trial say, we can't touch this, Sara is popular, Duterte is popular, we do this, it is political suicide. So regardless of the merits of the case for or against her, it is impossible for her, or it is impossible for us to totally remove or sort of discount Sara as a possible candidate in the future for the upcoming elections, for the midterms. So people will be watching a lot what happens in the midterms, because if the Duterte sort of candidates or the Duterte slate does well, then we could have a much more, resurgent, or shall we say, much more visible support for the former president.
Bob, so it seems like a lot depends on Sara. If Sara is impeached, is it the end of the Duterte dynasty?
For the meantime, yes, because then she will not be able to compete in the 2028 elections. I don't think there's anyone in the immediate family who can be elevated to the national prominence that Sara has. So it will be difficult for them to find someone. Now, having said that, if you take a look at previous Philippine elections, whether you're talking 2004, 2010, 2016, you will see that any person considered as a favorite a year or two ahead of the elections eventually faded or even lost. Philippine elections are highly personalistic. The candidate normally who wins rides a wave of popular sentiment, which only becomes evident near the elections. So can one of the brothers of Sara, she has two brothers who are now holding elective positions, can they come forward and claim the Duterte mantle at some point? I would say that remains an open possibility because, again, elections in the Philippines are highly uncertain until the 12 months before the vote.
Talk to us about the reaction on the ground, and what does it say about the state of stability in the country?
Okay, so the situation on the ground is, if you go to Manila and you talk to people in Manila, generally you will get a sense of agreement, broadly speaking, that what happened to Duterte was the right course of action, citing rule of law, the allegations of human rights abuses against him. Now, if you go to the south, which is the island of Mindanao, or to the central islands, which speak the same dialect as Duterte, you will see a fair amount of sympathy for him, if not support for him. And this is the unpredictable sort of situation in the Philippines. I don't think they will be able to sort of rally or gather or protest in a way that stabilizes the administration, because it's really difficult to coordinate stabilization against the current administration, because you have to bring all these people together, bring them out of the streets in force for a sustained amount of time. That's not likely to happen. So, but you will get that sense. Now, it's difficult to sort of quantify it because we don't do surveys. It's one of the failings of the Philippine political system that we don't do quick surveys. But it's almost like if you're thinking of Thailand as an analogy, you get the sense that Thaksin has a strong base in the north, in the Isan, while the anti-Thaksin forces have a base in Bangkok and in the south. It's almost the same thing in the Philippines right now, but flipped on. So what's the situation on the ground in the Philippines? There is a fair amount of sympathy for the former president in the South. Whether it will manifest in protests is unlikely, I think, because of the difficulty of coordination. The question is, will it show up in the vote? And ultimately, will it show up elsewhere in different parts of the political system?
So politically quite stable domestically right now. How about in terms of the international perspective? We know when it comes to Duterte, he leaned more towards China, and it's quite different for President Marcos, who's leaning more towards the U.S. Might this have implications on foreign policy?
Yeah, so definitely foreign media coverage of this will, I think, slant towards the positive for the Marcoses, in that Duterte, who was unpopular with foreign media, with Western capitals, is now being brought to justice. That will be the narrative coming out in terms of foreign policy and foreign media. And obviously, I think there will be less coverage of the alternate view, which is that this is a political play by the Marcoses to remove their opponent, although it is covered as well fairly in foreign media. In terms now of foreign policy, I don't think it will have much an effect. Marcos has bet his foreign policy on aligning with the United States and obviously, or with what you might call the West, and obviously bringing Duterte to The Hague aligns with the sort of perspectives or norms that the West had against Duterte. So it keeps Marcos sort of in the positive light and Duterte in the negative light. But what happens next will play out largely domestically. I don't think it's going to have a bigger effect on the geopolitical stage.
So for investors right now looking at developments in the country, what should they be looking out for?
Yeah, so the big challenge for the Philippines is twofold. One is, can it implement reforms? And on that, our view is, given that the government is focused on politics and on just the whole Duterte versus Marcos dynamic, outlook for reforms is not that strong. So we're not that strong on reforms. Now, the second thing is, Philippines, unlike its peers in Southeast Asia, such as Vietnam or Thailand, are not as dependent on commodity flows or on manufactured goods exports. It's dependent on worker remittances, some investments into the service sector, such as BPOs, and some investments into mining and manufacturing. And those are unlikely to be as adversely affected by what's happening geopolitically in the world on trade, etc. So I think Philippines will plod along as it has for much of the past few years, growing a little bit more if external conditions are good and if remittance flows are good, growing a little bit slower if there's a shock, such as a bad typhoon season or bad weather season, or just a decline in animal spirits for consumers. So, I would say there's not much volatility in terms of our expectations regarding the economy. It'll be just business as usual.
Bob, thank you so much for that. Bob Herrera-Lim, MD of Teneo. Now, Canadian convenience store operator Couche-Tard says it's willing to increase its offer to acquire Japanese rival Seven & i, but that's only if the firm engages in takeover talks. We're joined by global business reporter Nick Takahashi in Tokyo. Nick, take us through what's transpired so far.
So what we saw today was Couche-Tard's charm offensive. The CEO and founder and CFO made an appearance in person in Tokyo at a press conference just across town. On top of that, they unveiled a website in Japanese and announced recently that they were going to open an office in Japan. So all of this is to convey to Seven & i, the company board, investors and shareholders on both sides, as well as the Japanese government, that Couche-Tard comes in peace, that this is a good deal in the hopes to convince Seven & i to engage more genuinely in negotiations over a possible deal.
I guess the big question is really, would Seven & i engage?
Yeah, in the days and weeks to come, hopefully we see more of a response on their end. Couche-Tard founder and chairman Alain Bouchard said that he was disappointed in the lack of engagement from Seven & i over the last half year or so since their approach to Seven & i began. And CEO Alex Miller made it clear that if Seven & i comes to the table, gives them the due diligence, that it's a possibility that they could expand their offer. What exactly that means, only time will tell. But they've made it clear, I think, to the extent that they can, that, yeah, they come in peace and that they just want Seven & I to come to the table to have a genuine discussion over what's possible.
The thing is, Nick, they may come in peace, but it also depends on what regulators think. I mean, what's the regulatory path for this to actually happen?
Well, in Japan, there's always a lot of bureaucratic red tape, and in any sizable tie-up, especially one of historic proportions like this, the Japanese Trade Ministry is going to have a lot to say over this, and the Federal Trade Commission as well, the FTC. The Couche-Tard leadership today made it clear that they're willing to engage, and they've done this dozens of times before, maybe not at this scale, but that they are prepared once Seven & I engages, if and when Seven & I engages, to get through that process. If anything, they expressed a bit of frustration, I think, based on what they said during the press conference, that process hasn't already begun.
You talk about scale, Nick. I mean, a merged entity would mean more than 100,000 stores, 150 billion in revenue. Talk to us the implications on the industry should this happen.
I think one big concern from the Seven & I perspective is the cultural difference between Couche-Tard and Seven & I. When we're talking about, Circle K convenience stores, and then on the other hand, 7-Eleven convenience stores, we're talking about a different market, different country, different nationalities, and different expectations of what customers expect when they go to a convenience store down the road. From Seven & I's perspective, that weighs heavily on the possibility that they can engage with Couche-Tard. But from Couche-Tard's perspective, it seems their main argument is that we've done this before, and in Seven & I's case, we think we have a lot to add. Yeah, I think the rest comes down to whether either party is convinced.
Nick, thank you so much for those insights. Global business reporter Nick Takahashi in Tokyo. In Asia, we're seeing some gains pretty much across the region, but one stock we're tracking in particular is Alibaba. Remember that AI model? Well, let's take a look at how Alibaba is reacting right now, currently down by 2.7% for Alibaba stocks trading in Hong Kong. It's just released a new version of its AI assistant Quark, and but not providing any support right now. Alibaba trading down by 2.8%. Perspective is in question right now. Of course, this is one stock that's gone pretty much gangbusters. Well, that is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.